Hi, I'm Milton Rendell and welcome to Real News Friday. Look, an interesting week. 932 sales done in Western Australia. Stock levels sit at 8,484. So we've taken a dip in the stock. I would say that a lot of that's due to COVID. Obviously, people weren't able to get agents into appraise and kick off their marketing campaigns. So we may see an adjustment in the market probably in the next 4 to 6 weeks in terms of that. I expect the stock levels will rise slightly. Now, in terms of the sales in the last week, there was a large rise in land sales, so that was probably due to maybe a subdivision or a whole pot of settlements occurring at one time. So that was up about 140%. So actual unit sales or strata sales were down 27%, and our home sales or house sales were down 3%. So it's an interesting week. Obviously, COVID throws in a few different variables, so we'll see how that pans out. Like I say, over the next 4 to 6 weeks. In terms of rentals, still 2,817 sitting out there in the marketplace, but I am expecting, speaking with other agents, that we are starting to see the vacancy rate sort of change a little bit. Speaking to a lot of agents, people are giving notice. There seems to be a fair bit of movement of people considering to moving out. Maybe that's a bit of a consolidation. And I still think that's possibly a slight hangover from the reduction in the government support schemes like JobKeeper and JobSeeker. So I still think the impact of those are still flowing through, although I don't think it'll be dramatic. I just think it'll soften the market slightly. And talking to agents overall, who are closer to the coast than we are, we're hearing a softening. When we say softening, that doesn't mean it's everything stopped. All it means is that the volumes have slightly changed to where we were. Keeping in mind, we are well ahead of where we were 18 months ago and 2.5 or 3 years ago, and we're probably in a more balanced market than we have for quite some time. Demand for rentals still fairly good. Rent values have gone up, as we all know, over the last 3 to 6 months, and I think we'll still see a little bit of adjustment in that part of the market over the next 6 months as people's leases expire. But once again, we're going to be careful. Certain areas will get better increases than others because they're more in high demand. So for the landlords out there, just be careful how you do your adjustments, because you don't want to be sending your tenant to being broke because they really can't afford the next leap, and then later find it's going to be hard to replace that tenant. So take a balanced approach to it. Replacing a tenant can be an expense in itself, so just be mindful of that. Overall, the marketplace, our home opens, we are still seeing good numbers through those. We're seeing a big interest in the range of sort of 300 through to about 450 and around the Midland, Midvale, Swan View areas. Obviously that's lower end market, but we are seeing some good surges as into interest, one from first home buyers and second from actual investors, because they can see that the return on their money is there. So that's something to sort of keep in mind. The hills in itself, always, the hills is a unique lifestyle, as we know, and we're certainly seeing good inquiry through our hills offices, and our commercial and industrial division probably the busiest they've been for probably 10 years. So there's plenty still happening out there, and we still think that'll continue for the next 6 to 12 months, and I don't see much variation in that at all. Overall, the marketplace continues just to chug along, as we call it, and I think that once again will continue. I think the positiveness is still flowing through. Interest rates are still low. They're still talking about interest rates still flowing through at the same rate, or in and around the same rate, for at least the next 18 months. I don't think we'll see much of a change. There will be some impact probably from what's happening in New South Wales. I don't think it'll be overall affect us in West Australia, but it will affect the Australian economy in different ways. And obviously in West Australia we had the small lockdown that we had, and I think probably the next 3 to 6 months we will see some impact. Though that was only for a short period of time. I think there's a lot of small businesses that might have been the knockout punch for a few of them, so we're going to be mindful of that as well. But overall, looking still fairly good. If you want to know anything more about real estate, check out realestateplus.com.au, or you're always welcome to email myself direct at milton@realestateplus.com.au.